Good evening. I'm Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Monday, the 8th of May, 2023, 6:10 p.m. Central Time. So when we look at the markets, and you can see you're down a little in the stock market, metal's giving back something. Gold was up today, it's given that back. Dollar up a little bit. And other than the yen, most currencies down, with bonds, notes up. And a strong day today in the energies, but giving some of that back in the early evening. What's tomorrow about? Well, we'll get into that. Let's talk about the first event tomorrow. After the markets close, why I don't know, it appears that then President Biden's going to meet with the two top delegates from the House of Representatives and the two top delegates from the Senate. So it'll be 5 people in theory in that meeting. They will talk about the debt ceiling, that they don't want the government to shut down come June. What do? And if everybody holds to their posture, nothing gets done. So it's called a horse trade. What are you going to do? Do they do this now? Probably not. What they probably have to agree is to get an extension to get more things done. You should ask, Ira, this has all been coming. Why does it always go to the last minute? Then they have to do the extensions. And the reason is, it's a political nature of way of getting things done. This is the president running for office again. He's got to prove at his age he's there with the might. He's fighting for the people, and he's going to get that. And at the same time, it's an election year, and the Republicans want to make their inroads that, no, we're going to stop you. You can't keep spending. It's unfettered spending. So these are the two clashes we're going to get. Can they find a compromise? Yes, there's always a way to find a compromise. Can they find a compromise with the way each party wins something? Probably. That's how politics work. 2 and 2 is not 5 in politics. In our life, it is. That's not how it is. You can say 2 and 2. No, that's a 5, not a 4. And here's why. And then you give the reasons, and you're hoping to win your points with your constituents. Just the way it works. Then today we also had something. So we had the Federal Reserve's loan survey come out at 1 o'clock. And it's an indicator that's generally not even looked at, but because everybody's scared of what's going on in banking, people are looking. It's of 80 large domestic banks and 24 U.S. branches. The last survey came out, and it showed a combined 44.8% of respondents saw a tightening of standards for large and middle markets, and even more so for the consumer market and the small firms. So you can imagine there's the tightening starting to take place. So you have to look at that and pay attention to it. When we take a look at gold for the week, it's up 0.19%. Okay, it's a small gain so far for the week. When we take a look at what the gold chart is doing, you had your big spike up, you've pulled back, you're sort of consolidating right here. The pattern is still one of higher lows, higher highs. So unless the market gets under the 207 level, the uptrend stays intact. And the battleground's probably going to be around the 2014 level, what I call the line in the sand, which is the 18-day average of closes. Other than 1-2 days out of that, and today, the third day, just about all this time has been spent fighting at that number, so you can go back there and continue to fight. What's holding the market back from advancing as a chartist? Bollinger Bands. Only 5% of the time will you be above or below a Bollinger Band. Crucial to understand that. Therefore, the first attack on the upside or the downside, support on the down, resistance on the up, and staying out of the band. On a wide band, and these aren't super wide, but on a wide band like this, very rare that you can do it for any length of time. When you come out of a narrowness, you pop one way or the other, and then the market adjusts to it. That's the way that it typically works. In momentum, you're flat. So you have an uptrend support at 2014. You don't want to see the market under 2007 if you're bullish. And the resistance levels up here at the 2048 level. When we look at the silver-gold ratio, the ratio has been running the 18-day average of 78.92. It's still under it at 78.67. As long as it stays under it, silver, in theory, is stronger than gold. And when you look at this chart, you get to see that. You get higher lows, higher highs. Your support's back at 25.52, and you don't do real damage unless you get back under the low right over here. In the copper market, you've been under this 18-day average of closes and the green line, the 100-day. As such, as the market fell down to those Bollinger Bands looking for support, it rallied back to the resistance. Again, that line in the sand came down and again got back up there after good breaks in the market. The market's also an oversold market. Any readings that are under 30, I call oversold. They're not embedded where both the red and the blue are going sideways under 20. In the platinum market, you are in a neutral territory. You have a higher high, lower low pattern just running the 18-day average, has just worked itself out of being in an oversold condition. The palladium market today hit the key resistance, and you'll say, well, what are you talking about? All right. Here is the market before today. In a basic downtrend, you had lower highs, lower lows. If you clear this high, you look on the chart and go, where's the next potential resistance? Without looking at window envelopes and some of the other studies I use, it would be the closest moving average above the 18-day and or the Bollinger Band. So what did the market do? Goes up right there, hits the 100-day average, and now it's backing off from it. Okay. Is there a trade pattern? There isn't. You have a lower low, higher high. Then we come to the dollar, which is still in a bearish pattern now. You have lower high peaks. You have lower lows on the brown line, which is called a swing line. As long as that's in place and until you take out 101.55, the trend is down, the bias is down since you're under the 18-day average, and momentum is still down. So the pros are probably going to defend their short positions at 101.36. If you take out 101.55, everything goes neutral. If it drops much, then the next support zone, why not? The lower Bollinger Band where you've been before. So you put this together and you try to come up with what I call game plans. And that's what I try to do for you each and every morning at about 5:15. I start recording and I go through 40 charts in the morning. The charts look just like these. They're black and they have more studies on them. We're going to discuss entry points. We're going to look at both daily and weekly charts and some combinations. We'll talk a little bit about seasonals. We'll certainly talk about all of this, including the daily reports that are coming out, how the market's looking at the potential for those reports. And I try to give you new videos each and every week as best as I can. I wanted to do one last week. I admit I didn't. I didn't like the setups. I'm waiting for setups to show that I think make sense. On the weekend, I talk the longer term trades because they're based on the weekly charts. And you don't need to look at them every single day, obviously. You write down the stops we talk about and you take it from there. So how do you get to this? Well, there's several ways. If you're watching me on YouTube, there's a join me button in blue. Just give it a click and join. If you go to iRepstein.com, under the word research, it's right there. And otherwise, there's an icon. You can just move your cursor up here and you'll see icons appear. Give them a click. It'll take you right there. I'm Ira Epstein. Talk to you first thing in the morning. Take care.